Folks, welcome to the Contrarian Trader. This is Bob Desmond, and let's talk about the best stock charts for the coming week. Let's begin with gold. We've spoken a lot about gold over the past couple of months. We've had a very, very nice rally in the price of gold. However, I am becoming more and more concerned about the topping action. This is the weekly chart of the continuous spot gold price. And I'll go to the GLD in a moment. But take a look at each week, ever since we launched off the bottom at the 1124 level, every time we've rallied week over week, we've seen profit takers move in as noted by these topping tails on the candlesticks. So does that mean that we can't continue higher? No, of course not, but it is a warning flag. So I wouldn't be a buyer of gold in the coming week. Unless, of course, we manage to break out and above resistance. And I don't see that happening in the short term before we get a pullback. Now, let's acknowledge the fact that we have a new president that's going to begin governing effectively on Monday, tomorrow. And there's a lot of headline risk out there, and that could put a bid under the gold and the gold stocks, no doubt about it. So gold can continue higher given the fear factor, the unknown factor that many out there anticipate. You have a lot of geopolitical risk as well, and he's certainly going to be aggressive on that front and quite vocal. And gold may also continue to find a bid due to the fact that he was verbally abusive towards the strength of the dollar the other day. However, his policies are actually bullish dollar. So we have a lot of conflicts here in the gold area. We're going to need to see some headlines come out about policy, and that'll give us some longer-term direction on gold. Let's take a quick look at the GLD, the ETF, which also shows a lot of indecision. It's a little bit different than what we saw in the spot price. Now, the candlesticks on the GLD look a little bit different than what we saw on the spot price, but on a percentage basis, they were up about the same. Now, take note of this 4-week rally, but take note of volume. Volume is very, very light, well below average. So I am concerned about gold's ability to continue higher. And when you see a hollow candlestick or a filled candlestick like this, it probably means you're going to get a reversal of the trend in the short term anyway. Just like you saw back here, the week of April the 6th, we had a hollow candlestick, we pulled back. You saw a hollow candlestick back here. The week of September the 6th, we pulled back. I'm expecting the same. Now, when you take a look at the dollar on a weekly basis, there's not much good news here either. So while I am skeptical about gold's ability to continue higher in the short term, the same can be said for the US dollar. I mean, it had a horrible week last week. A bearish reversal. It was higher, closed lower, below resistance. But I think a pullback to the 25.75 level on the UUP sets the dollar up for a rally higher. And I've been discussing this with members for some time now. I'm expecting a counter trend rally on the US dollar. Why? It's because the trend is up, and it would be the exception rather than the norm for the dollar just to drop like a rock and not try to rally back and at least take out the prior highs. Maybe it doesn't. Maybe it fails and it breaks down, just as it did back here. We pulled back, rallied, broke down. Back here in March of 15, put in a high, pulled back, lower high, broke down in April. So that could happen here. And I think that that is what a lot of institutional buyers of gold are looking for. They want the dollar to break down because they know, absent fear in the marketplace, it makes it very, very difficult for gold and the dollar to rally in tandem. The last time we saw that was back during the Brexit debate and the lead up to the vote back in June of 2016. So no doubt we're going to see a lot of volatility in the currency and the precious metal complex this coming week. All right, so let's talk now about a longer term trade or investment I'm actually looking to put on. This is the Global Greece ETF. Let's take a look at a monthly chart. There aren't a ton of names that I really like aggressively as we proceed into the coming weeks, so I decided let's do some shopping. Let's take a look at areas where people have left for dead. It's a really good contrarian play, and this is a trade on Greece. Nobody's been talking about it, therefore we're looking at it. Everybody hates the country. It's going to hell in a handbasket. Well, it's time for us to take a look. And you can see that we peaked out at a price of $24.67 back in March of 14. We pulled back to a low of $5.45. We stayed in the trading range. Now we're putting up a series of higher lows, and we have broken out of this downtrend channel. We have yet, though, to break out into a new uptrend channel. So we're going to be looking to buy the GREK in the coming days or weeks as we begin to see a breakout on the shares. So I like this chart very, very much. We want to buy when we see higher lows, and we also want to see breakouts above resistance levels on volume. Take note of the stochastics higher low getting put in and higher highs now. So we may be involved here a bit sooner than what I may be leading on to right now. I'm going to take a look at the daily chart and the weekly chart, and I'll discuss it further with members. This stock here, UVV, I'm looking to short. It's very, very overbought, and before I go into why we want to short it, I will preface what I have to say with this. It is a heavily shorted stock. If you are not disciplined, I offer that you should not short this stock if you're not going to use a tight trailing stop loss order. That being said, UVV weekly chart trading above its third standard deviation Bollinger Band. It's not supposed to be there. RSI 84. Volume last week was very strong. Now, when you take a look at the daily chart, we have RSI at 92.78. Very, very overbought. However, we closed at the highs of the day on Friday. That leads me to conclude that we will probably see higher highs in the coming week. Volume, well above average. So what I think we have here, this is a blow off top. So members will be looking to short UVV as a swing trade scalp to the short side. Next chart up. This is an extreme oversold trade in the short term. Longer term, it is a long-term short. Target, TGT. All right, so Target has on a daily chart RSI 19.86. It can go lower. It's broken down below a few support levels, which now has me wanting to take a look at the weekly chart for historical support below. We are leading into the third standard deviation Bollinger Band in red. Volume very high to the downside, weekly chart. Now, this is why I'm saying that we are going to look to short Target as a longer term short, but only after we see a counter trend rally, because we have a confirmed breakdown on TGT on a weekly basis. We broke down below this very, very critical support level at 64.35, and we closed there at 64.10. Volume very, very high. So again, near term, we are going to look to buy TGT as a counter trend long trade. We'll then look to short TGT as we begin to see the short squeeze rally peter out. Next chart up, Cheesecake Factory. Before I go into this analysis of this stock, let's first preface it because I want to buy the shares. Let's first acknowledge the fact that we have lower highs here and lower lows. Now, what we might have, let's update the chart. I'll show you the value of annotating your charts. Okay, so here you have it. We have a higher low being put in an RSI. We have the price action within a triangle formation. On Friday, we flashed a bullish engulfing of Thursday's price action. This is a very, very bullish event. Now, you could buy here, but you'd want to use a stop right below this lower band of support. Ideally, you would want to buy shares of cake in stages. Buy a position, a small position here, add on strength. Take note of MACD histogram. Putting in higher lows now. Possible double bottom setup on the fast line of MACD is noted by these two arrows. Higher low getting put in on Williams percentage R. So cake is looking interesting as a long trade. The triple Qs daily chart. I am bearish on the triple Qs. We are looking to short the triple Qs. Why? The reason is this, is that the rally in the triple Qs, let's go to a weekly chart. All right, weekly chart of the triple Qs. You can see that there's no divergence to be found on the indicators. RSI is confirming the price move high, as are the Stokes. What should be concerning to everybody out there is that we have a rally that is accompanied by very, very light up volume. So the question that needs to be asked is, who's going to buy once we break? Because if they're not buying on momentum right now, who's going to buy on fear? And the last time we saw a big rally on very light volume was back here. And you can see these are very similar volume bars. In fact, Friday was consistent with the final days of this rally. So I would be cautious of the triple Qs daily chart. What I always teach members is that the market sends us signals. Rarely does it not. And you can see that the market has been telling us for several days now, vis-a-vis this price action on Thursday, where we had a bearish reversal day, and then on Friday, a filled candlestick. You do not want to see a filled candlestick or a hollow candlestick at the top of a trading range, because more than likely, you're going to get a pullback. Just as you saw here, pulled back here, pulled back here, pulled back, etc. Is it 100% a guaranteed? No, of course not. But when you add this observation on a daily basis in with the weekly chart and the rally on very light volume, you should be concerned. So how do we plan on trading it? We plan on trading it using the SQQQ. And while I'm not ready yet to go jumping in on Monday morning to buy shares of the SQQQ, it's coming fairly soon. What I'm looking for here is for the RSI to hook up. I'm looking for a double bottom setup on Stokes, as you saw back here. And I think you have that forming right now. And I'm also looking for a reversal day, a bullish key reversal day. Much as you had back here prior to this run up, much as you had here prior to this run up. So members, more to come. Okay, next chart up is Amazon. I was bullish on Amazon going back a few weeks ago. I am now turning bearish on Amazon. This is a daily chart. You can see that on January the 13th, we put in a topping tail. It's a sign of profit takers at resistance. No shock. We pulled back to $800 per share, bounced around there for a while. Then we began to rally, and the rally is coming on very, very light volume. And on Friday, we saw a reversal day off the highs of the day. We have a possible head and shoulders setup on RSI, left shoulder, head, right shoulder. Here's your neckline. We'll be watching for a break. Now, the Stokes may hook back up, and if they do, you can bet that I will not be shorting the shares anytime soon. But if they continue to roll over and Amazon begins to break down below support, well, then we'll be looking to open up a position using put options. And I'll probably use a bear put spread. That way the trade is partially financed. Weekly chart, you can see that Amazon may be putting in a double top. Prior top 847.21. The shares bottomed out at 710. We have a new lower high at present of 821.65. Does that mean it can't move higher above 847? No, of course not. It most certainly can. But if Amazon rolls over and closes down below 710.1 10. That's a confirmation breakdown. That'll put Amazon into the sights of shorts, and you're going to see a bear raid on Amazon. And keep in mind, Donald Trump is now the president of the United States, and he has a ton of hate for the Washington Post. Who owns the Washington Post? Jeff Bezos. Who can make life very, very tough for Jeff Bezos? The Justice Department with their antitrust. All they need to do is rumor that there's an investigation. You're going to see Amazon get slammed. All right, next chart up. Cal-Maine Foods. We are bullish on Cal-Maine Foods. I love the consolidation range. I love the fact that it is a defensive play and that soft commodities have been rallying in 2017. I discussed that in our 2017 stock market forecast, and the soft commodity plays, ag plays, are doing well. So Cal-Maine Foods is an ag play. You can see that we are finding support at the 50 level on RSI. We have a double bottom setup forming, no breakout yet, but it appears good. We are in a pennant formation, nice rock solid support at the 42.35 level. Volume has been light, but we're in a consolidation range. That's fine. Stokes are trying to hook back up. We don't have that yet. What we're looking to do is to open up a position using our 2-hour chart. I'll go over that with members. We will buy on a breakout, and then we'll add to our CALM position on a breakout above resistance, wherever that might be when we decide to pull the trigger. But this upper band of resistance will give you a good idea of where we're looking to add to our position on CALM. And I see that happening fairly soon. All right, the next chart I'm watching is DUST. Now, it's no secret I've been bullish on the gold and gold mining names, but I am wary of the dollar. I am very, very wary of the dollar. I think that the dollar will reverse off of support. I think we will get a rally in the dollar fairly soon. What does that mean for gold and the gold mining plays? They are going to get hurt. What will we look to do? We will look to book our profits in our gold stocks, and we will look to open up a position on DUST, D-U-S-T, which puts you short of the gold mining names. Now you can see it's clear that DUST broke down not last week, but the week prior below the lower band of support. So this is a broken ETF right now. That doesn't mean that it can't be used as a short-term trading vehicle. So while longer term, the picture is not pretty for DUST, I think that the price action of the US dollar, as shown here on the weekly chart, will probably reverse off of support at the 25.75 on UUP and maybe 99 on the Dixie. And it's on that reversal we will look to buy DUST. So members, stay tuned. And of course, we'll be looking to book our profits or at least hedge our position on the gold stocks. Next chart up, Rick's Cabaret. We were bearish on Rick's when it was extremely overbought. Now we're bullish. Let's update the chart. Okay, so first I'm going to go over the reasons why I am bullish on Rick's, and then I'm going to talk to you about some concerns that I have. So why I'm bullish? Well, we bounced off of the lower band of the declining downtrend channel on RSI. We're now hooking back up again. That hookup came on the heels of a breakout above the upper band of resistance on price. Good stuff. We had been consolidating for a few weeks with support at 16.13. So we have a sound base with the shares breaking out of that base now. Okay, so what concerns me? Well, we'll begin with where I was optimistic with the RSI. It's hooking up, yes, but it is in a downtrend. It has not yet stopped putting in lower highs and lower lows. Until that's negated, I have my concerns. What else concerns me? Volume is below average. Ultimate oscillator, lower highs. So we have a breakout on price on light volume, and the ultimate oscillator is not confirming this move higher. It is putting in lower highs. So we have a bit of a divergence. Stokes, they are still in a downtrend, no breakout yet. So while there are reasons to be optimistic, there are also reasons to be cautious with Rick's Cabaret. So members will go into our trade of Rick's in more detail when we decide to pull the trigger. Okay, next chart up is Penn National Gaming. So a bit of background about how I look at stocks. I run scans generally on a daily basis, meaning I use the daily technicals to run my scans. But before I decide what I'm going to do with the shares, either buy them, short them, I want to take a look at where the stock has been to determine where it might be going. Because then I'll decide, okay, maybe I'm just going to do a short-term swing trade, or perhaps we may have an investment on our hands. Now, what I liked about this chart is that we have been in a trading range for quite some time now. It's very, very well established, and we have a well-established support level, which we retested and held last week. So while no doubt the trend is lower, we are in a downtrend, we are now consolidating. That we're not putting in lower lows anymore, but we continue to put in lower highs. Now, in terms of the indicators, RSI broke out the week of November the 14th, pulled back, retested, now is putting in higher lows and higher highs. Price is not following through yet. So we have RSI leading price performance. So the weekly chart is looking interesting because I know exactly where I'm going to put my stop loss if I decide to get involved with this trade. Daily chart. Now, it's the daily chart that brought the shares of Penn National Gaming to my attention because on Friday, let's update this chart. Let's put some lines here. Okay, this is better. You can see that on Friday, we flashed a bullish engulfing of Thursday's move. Very, very bullish stuff. And especially when you see that we bounced off of that $13 per share level, we just went over that in the weekly chart, we know to be historical support. Now, volume was great. Buyers were at the ready at the $13 per share mark. They bought up the shares. Now, I will caution about the volatility, and it's a classic case of a breakout point failure. You need to sell them. Now, what's a breakout point failure? It's when you break out above the upper band of resistance and then immediately fall back down into that trading range. What I teach members is that at a bare minimum, you'll come back down, retest the lower band of support, and there's a good probability that you will break that support level, which is what we did. So it looks like Penn got washed out, and now they're going to look to take it back up again. No guarantees, obviously, that we're going to break out above resistance once again. But if we do, you're going to see the shorts get squeezed dramatically. So I like Penn as a long trade. Take note of RSI, double bottom setup, hooking up now. Stokes, same thing. And money flow, rising. So an interesting set of charts. If you're not currently a member, please take advantage of our 14-day free trial offer. Join us in our Facebook discussion group. And don't forget to follow us on the social media platform that you might be watching this on. Everybody have a great trading week, and I will talk to you next week. Be well.